This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. You know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by Conner Management Group, a registered investment management firm serving individuals, business owners, and family offices. Hi, everyone. This is Mathis Conner with Conner Management Group, and this is the Best Stocks to Buy podcast. Today is Thursday, August 9th, 2018, and this week we're going to look at the best growth stock to buy right now. And on our opening slide, it's called the setup and the approach. Now, the key objective of this podcast, if you are new to it, is to present to you a high probability upside potential stock. We use a financial model, a proprietary tool that I developed that uses multiple valuation approaches across over 6,000 stocks every week. So the view you're getting is not driven by some sensational headline and some popular publication, but just focus on finding the best investment opportunity to present to you. Now, an easy way of thinking about my approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Now, I truly viewed creating such a financial model as daunting, but I believe that I was well prepared for the challenge. I have computer programming experience from being an engineer and over $15 billion of transaction experience from starting out as a Wall Street banker. So my approach didn't come overnight. I painstakingly reviewed over 40 years of white papers, taking away the best each had to offer, then added some of my own tested intuition to implement new data sets that weren't even available as little as 10 years ago. Furthermore, my model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections that they present to the public. Now, a point worth remembering is that these views are based on today. An unforeseen economic report, a regional conflict, or revised policy can change the expectations tomorrow. And also, because these views are based on today, it's nice to know that you're not getting the opinion based on some data from a month or 2 or 3 months ago. Benefit of using a professional money manager like my firm, Conner Management Group, is having someone experienced like myself and making educated assessments about the uncontrollable, as well as having someone to readily share their opinion or whether a particular event is reason for concern. And now, what did our model find for you this week? Our best growth stock to buy right now, we found it to be in the food distributors industry. Onto our industry overview slide, it says the food distributors industry is comprised of primarily North American food production companies. So here are 10 largest competitors by market cap, just to kind of level set what type of companies we're talking about. So here are the 10 largest competitors. Cisco Corporation, Domino's Pizza, U.S. Foods, Performance Food Group, United Natural Foods, Core-Mark Holding, Super Value, Spartan Nash, The Chef's Warehouse, and Primo Water. So those are the 10 largest food distribution companies by market cap. Now, what are some of the growth drivers in this food distribution industry? Well, there's several. Basically, we have a healthy domestic economy. Congressional tax cuts are helping out the financials of all of these companies. Low unemployment is, of course, driving demand for their products. We're in a non-cyclical industry. There are also digital drivers. For instance, Amazon has recently purchased Whole Foods, and they are now offering 2-hour delivery services. And also, a similar digital driver is driven by Walmart, and they began offering online grocery deliveries. Now, some of the industry challenges right now are trade relations and tariffs. If tariffs continue, there's an expectation that demand may wane a little bit. And also, another challenge is for these companies to maintain profitability amidst thin margins in the face of technology innovations. So, Amazon and Walmart, they're offering, online deliveries, and that involves technical innovations, and there's a cost related to that. So there's a challenge for these companies to maintain profitability. And now for the big reveal, the best growth stock to buy right now, we identified to be a company called United Natural Foods Incorporated. Their ticker symbol is UNFI, and we see the 6-month upside potential at potentially greater than 50%. I checked the numbers, and this company looks incredibly cheap, but they have strong projected earnings and strong projected cash flow, as well as strong cash flow and earnings right now. It looks like a true bargain, and I'd be surprised if it could stay at its current price level much longer. On to the quick facts slide. United Natural Foods Incorporated distributes over 85,000 natural products across 85,000 natural products, including grocery, nutritional supplements, bulk items, personal care products, perishables, and frozen foods. The company is one of only 2 nationwide distributors of natural products, serving more than 40,000 accounts in the United States and internationally. Whole Foods accounted for approximately 33% of 2017 sales. They own 13 natural product retail stores in Florida, Maryland, and Massachusetts. So this is a natural and organic food distributor, and they sell a lot of their products through other retail outlets, Whole Foods, as I just mentioned, being their largest account. Their website is www.unfi.com. The company is headquartered in Providence, Rhode Island. They were founded in 1976, and they have 9,700 employees. On to the metrics slide. Over the last 12 months, the annual revenue for the company was $10 billion, decent size. The net income was $172 million over the last 12 months, and the cash flow from operations over the last 12 months was $63 million. Their operating margins for 2018 are thin, as are most companies in the grocery, or I should say food distribution business. 2018, the operating margin is tracking to be 3.3%, and in 2018, it is expected to increase slightly to 3.5%. And there might be, as we will mention, they recently acquired Super Value grocery stores, so there's a possibility that those margins could increase. On to the valuation metrics. The trailing PE ratio right now for United Natural Foods stands at 10.2, which is a bit low, lower than average for the typical food distribution company. And the forward PE ratio stands at 8.9. So that relationship between trailing and forward PE ratios means the earnings are expected to increase. Similarly, the PEG ratio is at 1.0, and that is a classic level for a undervalued company with upside potential. The price to sales ratio stands at 0.2. The price to book ratio is at 1.0, also not high, and the enterprise value to EBITDA ratio stands at 6.4. The company does not pay a dividend. Onto the price chart, the stock price is near its year-ago levels, around $34 to $35. The stock has been much higher over the last 6 to 9 months. The stock price has been a bit volatile from a miss on first quarter 2018 earnings estimates, and also just some nervousness arising from the unveiling of the new Amazon and Whole Foods stores. On to the next slide. I call it the looking back and looking forward slide. Now, looking back on United Natural Foods, demand for the natural and organic food industry continues to grow. The stock price is near year-ago levels, though pulling back as much as 20% from about 6 months ago. And the company recently announced the acquisition of Super Value Stores, a wholesale and retail grocer. Now, looking forward for United Natural Foods, the recent acquisition of Super Value is expected to drive savings through leveraging of Super Value's wholesale network and infrastructure, continued growing demand for natural and organic foods is expected to drive increased revenues and earnings over the next 2 years, and increased earnings and cash flow expectations are expected to increase the value of United Natural Foods and drive up its stock price. On to the next slide, the why now, the bull rationale. We see the stock's price going up because of just a few metrics. Basically, one, increasing sales and revenue per share, and low valuation metrics. The stock is expensive right now, and the stock is expected to be even less expensive, cheap, even in the near future. So with the savings from the Super Value acquisition and increasing demand for its natural and organic products, the stock is already cheap, and if it's going to be cheaper, it's just hard to see how the stock price will stay at this level. And when they acquired Super Value was cheap, and they paid themselves a premium of the order of 60 to 70% on Super Value's at then current stock price. So the sector right now is undervalued, and we still see United Natural Foods itself as being undervalued as well. On to our last slide. It's called the summary slide. The financial statement quality we see for United Natural Foods is very good. They have a strong balance sheet with a good amount of cash on it. The net profit trend is improving. The price pattern trend, as we mentioned, has been, we're saying negative, but it's really just at a year-ago level. The industry outlook is positive. Natural and organic food demand continues to grow. The overall market outlook is positive. GDP outlook is up for the next year. The closing price right now for United Natural Foods is $32.51, and we see a 6-month price target as high as $77, and this is based on historic valuation metrics on earnings as well as cash flow. I've looked it over a couple of times, but this looks like a huge bargain. We see the company's 6-month upside potential at greater than 50%. So it's for all these reasons that we see United Natural Foods as the best growth stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Hi, everyone. Do you often wish you had a better feel for control over your investments? Do you often wish you had the ability to quickly get an answer to a question of yours when it comes to the economy or your investing choices? Do you often wish you had someone to bounce investment ideas off of just to be sure of your decisions? Well, I found you're not alone. And these are the reasons behind my firm, Kana Management Group. Kana Management Group is a registered financial advisor and investment manager in addition to being a podcast publisher. Our clients are professional individuals and small business owners. We help them invest and grow their retirement and savings accounts. A special sauce, so to speak, is a comprehensive value and growth finding computer program we created that we talk about in our podcast. The program and our approach leverages time-tested growth and value investing principles and then some used by legendary investors Warren Buffett and Peter Lynch. Additionally, unlike others, we are forward-thinking and use social media to both serve and educate our clients and their families to become better investors. We figure the better you become as an investor, the more you'll appreciate what we do for you. We now offer a free mobile app available on both Android and Apple devices that offer our podcasts, additional stock picks, videos, expert interviews, weekly economic summaries, news, and more, including the ability to quickly send us a question or concern to me directly from within the app itself for a quick reply. To learn more about our service and to download our mobile app, just visit our website at www.connormg.com. Or if you prefer, simply give me a call at 281-947-2201. That's 281-947-2201. All right, have a good week.